Welcome, everyone. I am John Ryan. I'm pleased to be with my co-host, Steve Merrill of WagerTalk and WagerTalk TV and a whole bunch of other things. He does a tremendous college football betting show and also the NFL, where he's betting against the public. And those have done extraordinarily well over many, many years. Welcome to the show, Steve. How's everything going?
Doing well, John. Yeah, busy time of year. We've got college and pro football still, and now college and pro basketball as well. So it's November's always a great month to be a sports bettor.
Oh, there's no question. Absolutely no question. I guess it's like the vernal equinox of sports betting when you have all four of them rocking and rolling together. But the chart I have here, if we can get started, and this will segue into your thoughts about the election. I'll share this with you ahead of time. I was watching the results early on, and when he won Dade County in Florida by such a wide margin, which had, to my knowledge, never gone Republican, I started thinking, maybe this isn't as close as the pollsters say it is. And like 2016, the same thing happened, and it ended up being pretty much a blowout, kind of like Alabama playing a much, much lesser team on the football field, if you will, maybe a 20-point underdog. It really makes me wonder about any validity with any polls that come out of the media going forward, which is sad. It really is sad that you can't trust what you're hearing with the poll results, but that was my takeaway from it. Personally, I think a lot of good things are going to happen in this country, and even if Trump wouldn't have won, I still would hope and pray that person would do the best that they could for the country and for us, the people of the United States of America. So anyway, this is the S&P 500. And again, much like 2016, a little bit different in 2016. When Trump won, the market actually initially tanked late at night, went down about 1,000 points. But then when we awoke the next day, it was up about 1,400. So an incredibly large range. And we're seeing a similar action here. Those lines that are underneath the price action are the ribbon moving averages. I kind of like using this because it demonstrates any overbought or oversold condition. So you can see here that we're starting to consolidate the recent gains. This is a daily bar chart of the S&P 500 futures. And we're in close proximity to the all-time high at 6,053.25. And we're holding steady. As long as the gap between the first couple moving averages, which are shorter term, obviously, don't get very, very wide, I think we're probably just going to continue to go higher. Market sentiment is really not that overdone right now. It's certainly, in that 65% range of bulls, which is a little bit concerning. But I think we're going to just, the trend's your friend. I hate saying the old adage, but we like that. Don't catch a falling knife. Well, this is a knife that's rising, so you shouldn't catch a rising knife either. What are your thoughts, Steve, on the election results going forward with what Trump is aiming to do here in his 4 years, and what your thoughts are on the S&P 500?
Yeah, I mean, the difference in 2016 was that Hillary was about an 84% favorite the morning of the election, whereas Trump was about a 57% favorite this time before the election. So the market, as you know, always dislikes uncertainty or change. So when they had it priced in that Hillary was going to win, I think that's why we saw that overnight tank. But then logic came out and said, look, Trump is obviously not anti-business. He's been a businessman his whole life. And I think that's why the market then went right back up. And now this time, also with having the Republican sweep, it's going to be a very pro-business House, Senate, and, presidential executive suite. So we saw everything jump. What we also saw, though, is that interest rates, or the bond prices dropped fast that night. We saw Bitcoin take off. We'll talk about Bitcoin a little bit, obviously, but there's a few reasons for that. But I do think the one thing the market's worried about is inflation. It doesn't look like rates are going to drop anytime soon. So a little counterintuitive to see, the stock market take off where rates are going to maybe be high still as well. People are definitely worried about inflation still. That's the one thing that might still linger, especially if the tariffs kick in. Having Elon Musk on board maybe could taper that down a little bit, because I would think Tesla probably doesn't want a lot of taper. They obviously rely on China a little bit. So be interesting to see how it plays out. But no, I'm optimistic. I think a lot of good things can happen, and we're heading in the right direction. And obviously the markets agree.
Yeah, and this is the 10-year note price. So 10-year price chart, if you will. The yield is opposite to this chart. So yields have been trending a little bit higher here over the last several months. Kind of more than a little bit. It was down around 360, and now we're approaching 4.5. But as long as we don't take out this low, Steve, from here to here, back in my Wall Street days working with institutions like I did, I would definitely be advising them to start scaling in on 10-year notes and even 30-year bonds. And people, real quick, they don't understand how treasuries work, I don't think, because it sounds very boring. We're all told that bonds are boring. But when you trade futures or even invest in a 10 or 30-year bond, each drop in yield, the yield value of a basis point becomes more and more. So if you buy bonds and yields drop, the value of that bond is far more than what you purchased it. And a lot of times you can make 10 to 20% over many, many months by buying these securities, and they're backed by the full faith and credit of the United States government. So I encourage people to study more on that, talk to your financial advisors. These are just our opinions, of course. But I do think this is starting to be like a beginning of a saucer bottom here, Steve. So we'll have to wait and see how that goes. But I got to say that if interest rates do take out that low, it's not the end of the world. It's not going to cause a crash. It just means that with Trump in office, the economy has gotten stronger than expectations previous to the election. Let's move on to coin here, because this has been the big one. There was a bullish rising wedge in place before this enormous move here in the last couple of days. And that wedge is basically right here, and then when it broke out above it, starting here, it looked like a false breakout, but then wham. It's interesting that the volume is pretty high on the day that it did bust through. 8,507 on that day, but volume since has not really shown like a significant amount of interest, if you will. I mean, there's 28,000 on that day, and then today we're at 14, which is half. We still have trading to go, however. But I'm just wondering if this smells like a short squeeze to me, Steve. And I think if I owned any more Bitcoin, I would blow it out now and just thank the good Lord above for a huge gain here. If you own Bitcoin, you can always get back in the market. What are your thoughts?
Yeah, I think it's good to hit 100 at some point. The question is, does it go down to hit 75 first and then hit 100? There's just no way to know. But if you look at that high back in March right there, it didn't break out until that gap is right above that 1 year high, or that really multi-year high that we had back in March. So that's pretty legitimate. I would say that's probably the new support level. Maybe it'll come down and test it. We always like to see it refill the gaps. That's a huge gap to get back down to. But yeah, there's a lot of upward momentum. Just to think a few years ago when it went from 60, almost 70 down to 15, I said 15 was probably long-term support. We'll never probably see that again in our lifetime. So it'll definitely be long-term support for multi-generations unless something really strange happens with Bitcoin. The other thing that's really changed is that, institutions and stuff are now more comfortable getting in because Trump is pro-Bitcoin. So that's why it wasn't just the inflation. There's a lot of things at task, obviously a little bit of an inflation concern, but also Elon Musk being part of the team, Trump being Bitcoin friendly in general. There have been talk about the U.S. trying to do their own crypto under Biden. I think there was some concern maybe, they would come back a backlash against Bitcoin if they did that. So I think all those things are pro-Bitcoin now that's not going to happen, and that Trump, Musk, these other guys like Bitcoin. So yeah, long term, I see it going higher, but I never like jumping in on something that went up in a straight line like that. So there will be a pullback. My guess would be, though, 75 will probably be support. And if it touches that, that's probably a great buying opportunity for somebody that missed this run.
Yeah, I agree. For what it's worth, I ran some of the Fibonacci extensions. I should have shown that chart. Next show I will. That had a first initial move from the breakout from down here to get up to about 88,700. Now, since it's broken through, we're at 91,685, and to go down 3,000 now anymore in this market is nothing. But if you see prices over the remainder of the week retrace back through 88,700 or make it 87,000 to give yourself a little leeway, that would not be a good sign because we are in a very overbought situation. And like Steve said, we could easily drop to the previous highs around 75,000. And if it digests there and consolidates and then starts another trend, there's nothing here that's telling me we're going to crash like the true trades we had recommended, Steve. And we'll never forget them as long as we live. We'll be telling our grandkids, hopefully great grandkids, about those trades with Bitcoin when they ask us, "Hey, Grandpa, did you know about Bitcoin back in the day?" And hopefully it's still around then. But you get what I'm saying, that it's not like those trades where we shorted it at 60,000, 57,000, and went down. Then it rallied back to the same level, went down. But this has been a pretty significant bull move since that period back. Forget what it was, because I do remember Johnny Detroit was asking us, what did we think the year-end price would be for Bitcoin? And I think we were all between like 18,000 and 24,000 for the year-end price. So times have changed. Let's move over to how about natural gas? I know that's one that you monitor quite a bit, and not surprisingly, it is starting to trend up. However, these charts can be a little bit misleading. The high here is $3.40. Down here is $1.40. So percentage-wise, huge range. But in terms of actual dollars, this looks like, well, certainly not like NVIDIA, but that'll be one we'll look at next. But what are your thoughts here on natural gas? And do you see any disconnect between the crude oil, heating oil, and leaded markets? It seems like this one's a lot more bullish than the others.
Yeah, I mean, the first thought is that, natural gas has been down for several years. Even when there's a war in Ukraine between Russia and Ukraine, it's still down. And that wasn't exactly friendly to it. And now you've got an administration and a president who's definitely not opposed to, energy and drilling more. So it's hard to make a case for it to all of a sudden shoot higher, I would think. But then again, it is really near record lows. And if you look at those highs and lows, earlier in the year, that high, at 3.392, it's like a huge spike there on that day. And then you look at that low a couple months later, you have a big candle there as well. So these reversals definitely happen pretty fast. And even if you look back there in June, that recent high, that reversal happened pretty fast as well. So you get some very explosive days, which makes it tricky, because if you're a daily trader, first of all, if you're a weekly trader, you're going to really miss it. Even if you're a daily trader, you're going to be getting in a much different price the next day when that trend breaks. So it's been a tricky market. I still think that 1.8 or whatever, you have down there looks like a double bottom back there from late July, early August. Hard to imagine that's not long-term support, even with a pro natural gas friendly environment now that we're going to probably have even more drilling and whatnot. Because once again, it's a commodity. It can't go to zero. We've talked about this before. And it was at 10 just a couple years ago. It didn't last long, but don't forget, you go back a few years, it was as high as 10, and it literally dropped down to like 2 or 3 within months. So that's what intrigues me. You see this 3-year here. I mean, look at that. Yeah, exactly. 10.02 to the dot. And that was July of 22. So we're talking about just over 2 years ago. But look how quickly, I mean, it wasn't just July of 22 to basically like March of 23. It went from 10 to 2. Just crazy for something that's as widespread and big as natural gas. I mean, we're not talking about some meme stock here. This is a huge commodity.
But this is enlightening here, because if you draw the trend line with these tops, it's another bullish potential wedge here. Looking at this is a weekly bar, not a daily, but this looks like it's ready to really surge and create some short covering activity. Volume is pretty consistent for this day, so not yet. But I think if we start seeing prices above 310, perhaps that's going to generate probably some significant short covering and buying interest that could propel it to 4, in my opinion.
It's just interesting. I'm not a fundamental trader at all when it comes to commodities or even equities. I'm just a technical guy, a quant. But it's hard for me to make a case why natural gas would go up now, because you've got a pro-natural gas administration when it's been down for a couple years. But then again, whenever it seems too obvious, it usually goes the other way. But yeah, I mean, the risk reward on this, once again, is just fantastic. You're looking at a all-time low of 1.5, which I really think probably is going to be the generational low. And now it's, it's almost at 3. So it's a bit off of that. It's almost a double off of that, but still, yeah. I mean, we've seen that it can run to 10. it's hard to make a case subjectively, though, because we should have less tension around the world. You would think that's going to get better as well now with the stronger administration as far as international, wars and whatnot. And they're also pro-energy, pro-drilling. But I don't know. There'll be a black swan event, I guess, that'll probably push this higher.
Yeah, I completely agree. Let's see. What else do we want to look at? Let's just check crude oil here as a comparison, because this one's not going to look anything close to what natural gas is doing. And this is where I'm not too concerned about inflation. And honestly, I'm very surprised in the ads that we saw that inflation was such a concern. Well, you can see that the high way back here, after COVID, was 130 and 50 cents a barrel for 1 barrel of crude oil, which is 1,000 gallons. So this move here represents, basically essentially 50% decline in the price of crude. And if you look around your house, you look around your office where you're at, you go to a restaurant and look around the place, the majority of the stuff you're looking at has been made with crude oil or a crude oil byproduct. So it's one of the biggest factors other than food prices, which I agree still need to come down. But we saw what happened with Jimmy Carter when he tried price freezes, and it was good, very good academic idea, but it didn't work so well in the real world. So I think I'd like to see the markets just price the things for us, even though food is very, very high for the majority of people in this country. I do think that'll subside in time. But this is not concerning to me. And then you have gas prices in the Northeast right now. I've seen 277 for unleaded. Premium is still 80 to 90 cents higher, but that's been kind of the spread for the last couple of years. But this is unleaded gas. So again, right after COVID, all the pent up demand, we get up to 432, and that's without the taxes. So if you live in a state like New Jersey, the price of the pump probably was around 480. Maybe in other places, $5. In places where it is generally high because the oil can't be brought there economically because there's no. What am I trying to say, Steve? There's no pipelines that are close by. Like in New York, it comes right into the harbor. It comes in New Jersey, tractor trailers. So it doesn't cost that much, relatively speaking. But anyway, we have now come down a lot. So again, to circle back to what I said, I was surprised that one of the candidates didn't say that. Well, Trump wouldn't have said it for sure. But Kamala, I think, had a chance to say that inflation has waned under the Biden administration. Not that they would have done anything to create that. It's supply and demand. It's the market doing it, not the president. Not any human being can create a policy that's going to make the markets do this. I hope that was clear. But what are your thoughts here on prices of gas and where we're heading with that?
Well, I will say this: the risk reward of the upside is pretty good on this trade. Look at the bottoms there. I mean, you're going back to like early 2022, almost 2.5 years back. You've almost got 4 bottoms at that price that it's at right now. Now it has kind of technically broken below those last 3 resistance lines, so maybe we are on the downward. But you could set in a very tight, narrow trade here, depending on which direction you like, and just have a stop loss right above that channel here that we've been in here for the last several months. And once again, subjectively, I'm not a subjective trader. My intuition today, prices should go down, right? But the way that chart is setting up, it looks like it's a squeeze, and there is more upside potential. But once again, it's a squeeze, and this is really where you play it either way. You wait for that breakout, either below this support, and if it does break below this 1.8, by the way, it could be the bottoms could be out. I mean, because you're talking about like literally a 2.5-year support line there that would break. We saw with Bitcoin what happens when it breaks, support or resistance. But this is kind of a triangle wedge that's definitely forming there. We'll just have to kind of wait to see which way it breaks out.
Yeah, I agree. Just going to see if I can go back a little bit more here. This is 10 years now.
Yeah, and if you take out that drop in COVID there, obviously, and you see where that gap started, everything after that gap, basically in early 2020, you can kind of disregard because that was a world we've never seen before and hopefully never will see again. I mean, crude went negative for a second overnight, in the futures markets, which is just insane. But if you look where that gap started, that was a pretty good long-term support level that had broken down a little bit in 2016. We had almost a slight recession probably. But yeah, that's a long-term. What is that exactly like where that gap is at COVID there in 2020?
Right here.
1 point something. Yeah, 1 point, like 1.2,
24.
1.3. So once again, I mean, if this current one breaks, I'd say 1.3 would be your long-term, goal, but I can't imagine it gets much lower than that unless we have something really weird happen like a COVID again.
Yeah, and sadly, we have the situations over in the Ukraine, the Middle East, too, that would be very supportive of oil prices going higher if that escalates,
Right.
and hopefully and pray it doesn't.
Well, if you look, John, it's a good point because it really is a cartel. And if you look at how we had that spike at 120 in crude, a couple years ago, and it quickly came down to the 80, 70, 80 range, you almost never see it get below 30 or 40 either for a prolonged amount of time. So you really have that long-term window between, like say 30 to 40 up to 120. And if you take the halfway average, the 50% retracement is in the $80 range, which is where we've been hovering now, for several months, if not a couple years. But you're right. Oil is a great thing to trade long-term because there is some finagling going on there. And if it gets a little too high, they back off. It solves itself. And then if it gets too low, there is a floor where the cartel needs it higher. It's just a question of will we get back down to that, $40 floor or not. Yeah, you can see it right there. I mean, look at all those long-term support levels in 16, 17, 19. They're all right at the $50 mark, basically. I mean,
yeah, this is kind of interesting. I didn't look at one this long, but you can see like right in here that if we got below, say, this says 65, but if we got below 62 on a sustained move, that might be bad news for crude, because then you're looking at something just south of 50.
Correct. Yeah, and that just like that. What was it? The gasoline chart. I mean, it's the same thing. We have that gap all the way down to COVID. So I mean, and they're obviously highly correlated. You can, you trade one or the other, you're going to be looking at pretty much the same concepts.
Yeah. So what I'm going to be doing with the S&P 500, and you know this better than anyone because you've done so many shows with me, is I'm looking for those engulfing candles where we make a new high from the previous day, close below the previous day's low. And those happen quite a bit. In fact, I saw some on the charts we've already looked at. Let's go back to the daily here. 1 year, 1 day. So this is Tesla. And this is, not a stock you want to trade. I just wanted to bring it up because the increase in market value has been enormous. It's another $1 trillion company. And of course, for those that aren't sleeping in caves, it's owned by Elon Musk. And, it's going to be interesting to see how he and the pharmaceutical CEO that ran for president, they're going to combine forces to downsize government, streamline it, make it more efficient. And it'll be interesting to see how that goes. I think I read that Trump gave them a 2-year mandate that they have to have the work done that quickly. But the quicker the better. And you have two great minds steering the boat on that one. So I think that will end up being successful. But one last stock, Steve. And for those that don't know, Apple is not your largest company in the world anymore. It is now NVDA due to AI. Mm-hmm. I have stayed away from this company, Steve, since I took profits a long time ago at about 77. Just never in a million years thought this was going to explode like this. I still don't see any signs that it is going to come down, but my one model has fair market value at 107 a share. So we are way ahead of schedule, and earnings are going to have to be perfect and exceeding expectations. Otherwise, there's going to be a day where it is trading 146 and earnings disappoint, and you're going to be down at that 110.
Yeah, but look, I mean, 107 is almost exactly where those three bottoms are, including that gap back in June or late May earlier this year. I mean, so really, I think you're spot on with that. And this is so much like Bitcoin, right? I think long term, it's a legitimate company. It's just like Bitcoin's a legitimate currency, in my opinion. But it's gone parabolic. Now, it hasn't gone up in a straight line, and we have seen some pullbacks. But you're right; it's very dependent on earnings. And another incredible stat about NVIDIA that I saw the other day is that their market cap, their valuation is larger than 5 of the 7 nations in the G7 right now. their GDP, I think. Now, I mean, that sounds strange, right? I mean, if that doesn't sound overvalued, I don't know what is. And this AI thing is for real, and they're at the leading front of it. But we've also seen this movie before with the internet back in the 90s. And,
Yep.
you know, I mean, but there are companies historically have done this, like big oil and stuff, until they broke them up. I mean, there are companies that it's a sea change, just like oil was 100 years ago, like the internet was 30 years ago. And now this is the next sea change, is this AI. But I just find it hard to believe they're that far ahead of everybody else, like Microsoft or Google. I mean, there's other players in the game that can catch them. And we've also learned from history that first one in is not always the dominant player long term, right? AOL back in the mid 90s. I mean, that's who we all got on the internet with first, was Netscape and AOL. You don't hear them much anymore. Or Yahoo. I mean, Yahoo did hold on, but Google wasn't around until 1999. People forget that. I mean, you and I remember that because we were using InfoSeek and Web Crawler and the other search engines before that. MySpace was around before Facebook. Blockbuster was the big boy until Netflix. So I'm not saying NVIDIA is any of those companies, but it does concern you when something runs like this. When I hear that they're bigger than the GDP in 5 of the other 7, like the biggest countries in the world, something's kind of screwed up with that.
I agree with you. It reminds me, too, the differences in my memory of before the crash, when a buddy of mine called up when I was on Wall Street and said, "Take a look at this company, Gadzooks."
Huh.
I did, and it was worth more than Citibank, which at the time was the nation's largest bank in terms of market capitalization. Citibank made money for decades. Gadzooks never made $1. I think the CEO made 200 million, and all the investors went to zero, which is a sad story by itself. But I think the difference, Steve, is that NVIDIA is making gazillions of dollars every single quarter.
Yeah, I was just going to say, like, what's their price earnings ratio now? Do you know what their ratio would be? Even because they're definitely making money. That is the big difference between the internet stocks in the 90s, and I fully get that because that was based on hope, basically. But how pricey is NVIDIA? I mean, I don't play with individual stocks.
I don't know off the top of my head, but I know it's not normal. It's probably double the PE of a similar stock in that sector. But it's justified right now.
It's 70 to 1 right now, 69.5. Yeah. So that's exactly double the market. So that's not that crazy if you think about it. I mean, because it's probably been better than double the market. So that's fairly rational. I mean, it's not 1,000,000 to 1 like some of these internet companies that weren't making money were basically infinite because they weren't even making money. So it's, interesting. But 70 to 1 should. I would say this, it'd be very interesting back test to run, John, if you have the capabilities to do it, is to have a company that's at this big of a blue chip that is making money and is legit. It'd be interesting to see when their ratios get this high, or if they ever have, like with, say, IBM or Microsoft or Apple, when do they come back down to earth? Because, in fact, I'll run it right now. And I don't look a lot at PEs normally, so that's why I'm finding this interesting. Like Apple's PE.
Yep. I think Qualcomm
37 right now. So Apple's the exact same as the market, basically, I believe.
Yep. And that's that's sentiment too. That's that bullish sentiment that gets out of hand.
The S&P is 28, Apple's 37. So that kind of puts it in perspective.
One thing I want to mention here before I turn it over to you for closing remarks is that I mentioned engulfing candles. This big red one here is a textbook example. It should be a case study of what an engulfing candle is. You can clearly see that it opened higher, much higher. It didn't follow through. Excuse me. It started selling off, and it actually finished below the close of the previous day or the opening of the previous day. It also made a low lower than the previous day, and that's why it's called an engulfing candle. Normally, you get some kind of retracement the following day, as in this one here. So generally, you get about the length of this candle. You can take 50%, maybe a Fibonacci number like 38.2% of that range. And that's where you want to consider buying put options. And that's the strategy I'm looking for with NVIDIA. Option volatility is very high with this, but you can see the moves that you get are enormous. So risk reward is definitely there. Here's another one. This one actually rallied more than 50% of the previous day, but it didn't take out the high. Very next day, you get another engulfing candle, 2 out of the 3 days engulfing candles, and then look what happens. Goes from 125 down almost below 100. I guess it did go below 100, almost. And that's just an enormous move. I mean, think of the market cap that was lost just between here and there, and then subsequently gained to where it is now as a, what is it, roughly 3.5 trillion.
Yeah, no, I love that strategy. I mean, if you look at all the big candles, both good and bad, if you've just followed that momentum the next day, you've made money. In fact, look here, that week after that recent bottom in early September, you had the hammer basically, and then like the third day, you have a huge up candle right there, and it has not come back down to test that since. In fact, it came back down to like the top of it several times. But if you just stop, if you'd gotten in that next day, set your stop loss just below the big candle the day before, and whatever that day was, like the 12th or 13th of September, there to the right a little bit, you've had a nice up run. Yeah, that one right there. So what day was that? 9/11, ironically enough. So 9/11, wow. You got in the next day on 9/12, and look, it never really got anywhere near below 9/11 again. And now you've had a nice run up. That was at, what was it? It closed about 118. Would have gotten in about 118 the next day. You're up at 150 now. So, but yeah, that's pretty powerful stuff. You look at the candle. I mean, it's been very telegraphed when the bottoms or the tops, the short-term bottom or tops have been in. And if you look at now the candles now, a lot of small choppy candles. So I really think earnings is going to be the next big move. At some point it'll probably be somewhat idle here for the next several weeks. Problem with this type of thing, the options make a lot of sense, because if you're doing a daily chart, if you're doing a weekly, you're going to really be behind by the time you get in. But even a daily, once, like when earnings do eventually come out or any news comes out after hours, there's going to be a gap the next day when you can buy. So that's why I like the options, because I like that 107 level you've talked about. You've got metrics that indicate it, and if you look at the chart itself, it indicates it as well. So I think a put around that range, depending on the pricing, makes a lot of sense. And then you don't have to, try to jump in after a 20-point gap down after, some kind of an announcement after hours.
Yeah, we probably should do a show on options, or maybe I'll do one and just put it in like the library for educational purposes, because the 107 makes a lot of sense to me, and just know that if prices go down to about 125,
right, you're still making money. Yeah,
you're making a ton.
Right, you don't have to have it hit 107. It's just that, you just, if it has any kind of a quick move down, you're going to definitely have some value.
So, Steve, I'm going to turn this over to you. I know you have to get going for more work, more content, more shows. But who's going to win tomorrow night? The Commanders or the Eagles? I'm on the Commanders.
So I just did a video, which is up right now on WagerTalk TV. So I will tease everybody and tell them to go check out my prediction. So I decided, John, to do every Thursday night NFL game. Back in week 3, I was like, I'm going to put up every Thursday night NFL game for free, and I've gone 7-1 so far since doing that on the free plays. So I do have a free play in that Commanders, not my Washington Commanders, against your Eagles, and that game is up on WagerTalk TV. I'll tell you what, I'm almost getting back on board. I grew up as a Redskins fan in the 80s and 90s. Season tickets went up to over 100 games at RFK. So it's very difficult for me to get behind the Commanders or the football team or whatever they'll be called next week. But yeah, it's an exciting team, and the Eagles look pretty good this year as well. It should be one of the better Thursday night games. But yeah, I got a free play video on that WagerTalk TV here on YouTube. And then, of course, my official best bets and bonus free plays, wagertalk.com, Steve Merrill, wagertalk.com.
My thoughts, Steve, are very simple. The Eagles have not beat a winning record team, unless you count the Packers, who were 0-0 in week 1.
Yeah, no, they played a weak schedule, and they did beat the Bengals, a few weeks ago, but this debate if the Bengals are really any good as well. Commanders are interesting, I mean, their defense statistically is starting to get a little better the last few weeks, but then again, they haven't played many teams either. These are two teams that haven't really stepped up in class yet this year, so this season rather. So we'll see how it plays out. Should be a good game, though. Yeah,
it should be a good weekend, too. We'll learn a lot when the Steelers play the Ravens. We'll learn a lot when Buffalo plays the Chiefs again. These things kind of repeat every year, where you have these showdowns about halfway through the season, and it can propel the winning team to a playoff round, or even a deep run in the playoffs. But anyway, I just was curious what you thought there. I did not watch that Wager Talk, so I didn't intentionally set you up there, but I must have been
teasing the viewers. We're going to get them to click on it afterwards here.
Yeah, you bet. All right, Steve, I'll let you go. Thank you for your time. We're going to try to do this show once a week. Maybe it will be on Wednesdays, but just stay tuned. We'll let you know. And thanks for watching. And always remember, trade with your heads and never over it. And may all the wins be yours.